Prabhakar Tiwari, Chief Growth Officer at Angel One, then joins in on the show right now. Prabhakar, great to have you on the show. It's been making all the headlines, the fact that you've reported fabulous growth in daily orders, client acquisitions. Tell me about this client base figure right now and whether you see these numbers going up with every month or not, because I guess a lot is going to depend on which way the market heads.
See, we have been keeping our numbers steady even when the market was shrinking till 3-4 months back. In fact, that's the time when we were gaining market share as far as monthly acquisition numbers were concerned. I mean, at some stage we were at 20% market share, but when the market started shrinking, we went to 23% market share, then 25% market share. That's kind of acquisition market share on a monthly basis we accomplished. Now the market has crossed certain milestone. I think 10 crore overall Demat accounts in the country is a great milestone. We should all be proud of that. However, this is just the start. We have, kind of got the benefit of the COVID, but COVID is far behind us. In fact, I can tell you that today for Angel, the number of total client base is around 1.12 million, 1.12 crores and 11.2 million, which is roughly 180% growth over last year. I mean, this is the kind of growth which has been accomplished in a non-COVID year. And if I talk about a monthly number, we have seen month-on-month growth of 29%. So our acquisition for the month of August was around 0.44 million. Now, this is a secular trend. There could be minor setback. A lot of these things can be explained the way our market is held up against the global onslaught on high inflation, all the geopolitical instability, and multitude of other factors. With the technology coming in, with the new generation getting more educated about the market, and with great consumer-facing companies getting listed in the market, I'm sure the number of Demat accounts would reach 20 crores overall soon.
The derivative number has gone up, but has your brokerage also gone up in proportion? Because in derivative, while the numbers will look strong, the brokerage rates now are highly competitive.
Yeah, so if I talk about just number of orders, our number of orders have gone up by 9% month on month. If I talk about year on year, it is roughly 45% jump on number of orders we have seen. And if I talk about Angel's ADTO, I mean, at overall level, there's a month-on-month growth of 20%. In FNO, there is a growth of 20%. In cash, there is a growth of 22%. And in commodity, there is a growth of 24%. So all these numbers are telling that, the revenue side of the story, for at least for Angel, is very, very healthy.
So if you have to compare the last peak versus the current scenario, and I'm using the last peak, let's say Jan or Feb, when markets were at an all-time high, and if you compare the business of last peak versus now, has business gone higher than what the last peak was?
Yeah, we have been doing much better. Revenue side is looking very, very strong. And we have gained market share when the market was shrinking, as I shared. So somewhere, being a fintech broker, being a technology-oriented company, our efficiencies are showing up. We are able to kind of scale up at a much, much lower cost. Our CAC is much lower, and we are able to get a payback within 2 quarters.
Prabhakar, since you talked about the market share gain, could you give us the latest figure in terms of what your market share is in the various segments, and how's the cost of acquisition of clients really moving? Because that was one thing that the street was really watching very keenly.
Yeah, if I talk about overall equity or market share, as per our latest published information, is 21.5%. Our FNO market share is 21.6%. Our cash market share is around 14%. And our commodity market share is around 52%. So you can clearly see commodity, which is also a growing sector, and, we charge for commodity trades. We are at a very, very dominant position.
So Prabhakar, can you talk a bit more about the commodity segment that you're talking about? What kind of increased retail participation that we have seen? Could you talk to us about how volumes have moved, how the entire client base is moving when it comes to commodities segment?
See, I won't have the specifics on the client base movement and all at this moment. However, what I can tell you is that the interest has gone up, and we are seeing a lot of participation on our platform. And also it is there because, we have increased our advisory and coverages in the commodity as a segment. Also, I missed answering you on the CAC. CAC for us is very attractive because we have a multi multi-focused channels, not just in paid but also in referral, organic, digital referral associates, and B2B, which allows us to kind of play as per the market sentiment and manage our CAC in a more efficient manner.
A number which could be an indicative number which can help us judge that acquiring client is great. What is the cost of that client and how soon that client will actually become profitable?
Yeah, so we don't share CAC information in public domain, but I can tell you that within 2 quarters, we are able to get a payback. So, we are able to 100% recover the cost of our customer acquisition.
Do you think you will be able to grow irrespective of the market conditions? So one is growth which happens because of market conditions. In a bull market, the natural tailwind is there. But in a volatile or a subdued market, like what we saw in the month of May and June, what happened to your growth?
We continued to grow. I mean, there was not much drop in our numbers. They, sorry. Yeah,
Please go
sorry.
ahead.
Could you?
No,
could
please
you
go ahead, Prabhakar.
Yeah. So as I was saying that, during those months also, there was not much drop in our numbers, and we gained market share on monthly numbers. So we look at CDSL. So in CDSL, our market share went up from 20% to 23%, and then it went to 25%. So we were gaining market share.
Prabhakar, we'll let you go on that note. Thank you so much for joining us. A quick